Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thank you very much for listening, and I want you to check out our podcast on YouTube. YouTube is a great place for many, many things. You know, I've been going there a lot lately, looking at all kinds of different things, especially in our industry. There's a lot of useful information in there. Our particular channel is Jeff Barton, the Mortgage Voice. If you go there, you'll see this and many other shows, and we really thank you for listening each and every week. What I'd like to do this week is to talk some about emotions. Why is that important? Okay, so I just got off the phone with a friend of mine I've known since college, 50 years, let's say. Let's say it's 50 years. It's not, but it's close enough. It's interesting how people diverge in the woods, especially when they get older in life, and what keeps them going and what keeps them interested. You must have a bunch of friends like that too, Daryl, right?
I have a few.
Right.
You know, I've got a lot of acquaintances, but very few close friends.
Well, that's also true. But this buddy of mine, I mean, suffice it to say, we spent a lot of time in the trenches together. So I talking to him, and his life is what it is. Single guy, he has one son, divorced. Been on his own for a long time, and he's, over 65 years old, and he's, retired age and that kind of thing. So his particular life and how he leads it is quite a bit different than mine. I still try to think that I'm somewhat vital in what I do and how I present myself, and also the work that I'm still trying to accomplish. So given that and what it is, what are the emotions behind that? And the reason I bring up emotions between myself and my oldest friend is because when you're out there and you're looking for solutions, you're a young person, you're under 30 years old, you want to buy your first house. There's some interesting statistics I'll go through a little bit later about millennials and Gen Xers, Gen Yers, about what this year bodes for them in this decade in terms of home ownership. But the emotion that plays into many, many things. There is a terrific, if anyone is out there who buys National Geographic. Now, when we were kids, National Geographic was a magazine, right?
Yeah, it was required.
It was exactly. Well, today, of course, it's a supermarket thing next to the Inquirer or some other tabloid, or Us or We or Them, or...
Well, they've got some really bitchin' TV channels, though.
Yeah, absolutely. All that. This particular magazine caught my interest, picked it up, read some of it, talked about the science of emotions, which in fact there is no science, and there's very little research done on why people have emotions and what emotions are and what they're designed to do. In the home buying arena, in the mortgage shopping arena, when you're trying to figure out for yourself to trust a particular person, me, somebody else, in either a decision that you want to make or a decision that you need to make. The decisions that you want to make are, hey, I'm making pretty good money, I'm married, we're going to have children, it's about time I settle down and grab a house for long-term investment in terms of my retirement and everything else that comes along with home ownership. And then the have-tos are, my parents are older, or maybe they've passed away. Maybe they got to be moved into a nursing home. Maybe there's somebody in my family I'm trying to help, and maybe getting them a house. These are the have-to decisions you make in real estate. Both come with them a tremendous amount of emotional baggage, emotional, I guess, excess is what I'm trying to say. So how do you clear that away and make sound decisions when you need to? Well, like I say, trusting somebody, a professional with which to do that is different for each and every person. That's why in our business, in the mortgage and real estate industry, there are so many diverse and different types of personalities, because what works for one person is not going to work for another person. Case in point, I get calls probably weekly, complaints about people that either I work for or that I've worked with in the past. They call up, and they're all different kinds. Whether it's a person doesn't return a phone call, I've asked them to write a contract. They won't get back in touch with me in regards to showing properties, or they said they were going to pay my escrow and title, and they never did. Just complaints. And we all know people who have serious complaints about the people they work with or for, i.e. a real estate agent, mortgage broker, mortgage agent, anybody in the business. So how do you handle that in terms of when you're looking for an answer? You need to trust somebody, but at the same time, you hear all these horror stories about bad real estate, bad mortgage professionals. So what is the answer? What's your answer? Let's ask you. You have the answer.
Well, I mean, there's a screening process that you go through, and
Right.
Was on I bid a project at Lockheed Martin several years ago.
Right.
Very large project,
Right.
F blah 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 airplane. And I took the buyer aside and said, how we look. It hadn't been awarded yet. And she says, look, we have 3 technically competent competitors. They're all in about the same price range. We're going to pick the people that we like.
Right.
Because once we start doing business, this is a development program. We're going to spend a lot of time together. We're going to be back and forth across the country. We're going to break bread together.
Right.
And we want to pick somebody we like to spend time with.
That's,
We won, by the way, because of that personal relationship that you try to develop with the people that you do business with. Some people do, some people don't.
Right, and it's different, right? In that situation, for whatever reason, you or your team happen to bond with the people who are awarding the contract, right?
Correct.
Right. So in our business, it is the same way. The problem in our business, different than yours, we have a one-on-one relationship. So if you get into trouble, sometimes you question whether your own mind is playing tricks on you. Like, did that agent just tell me to go away in a polite way, but go away? Or is that person coming on to me in some odd way? Because these things happen, whether it's a male-male, male-female, female-female relationship, however it works out, you're never quite sure what is happening. So like Darryl was saying, look, you got to get out there and interview 2 or 3 people. I know it's a pain. I know that the baby's coming next week. I know that you're moving and need new residences right away. I know that all these things require immediate action, especially when you're pressed. So we've said on this show so many times, developing a relationship with the people you work with, whether it's being a mortgage or whether it's being a real estate agent, takes some interviewing skills and some time. I had a friend the other day, guy works for me, as a matter of fact. He said to me, I'm going to hire this year a personal assistant. And it's because I want to do more of originations. I want to be able to help my clients more on a one-on-one rather than be bogged down with the infrastructure of the submittal process and all the other things that really require time, but not a lot of, personal skills nor structuring deals, which is what I'm good at. So he said, I'm terrible at hiring people. Everybody I hire turns out to be a nightmare. So what he did, and I think is a great idea for anybody out there who doesn't trust their own particular way of doing this, he asked his wife, who is very good at it, and a friend who was also in the business. So they're going to have a little committee together, the 3 of them, and discuss candidates as they come in and interview. Maybe they'll interview 3, 4, maybe they'll interview 10. But that particular process in place, and now we've had Dr. Bertoli on, Jeannie Bertoli, who's been on the show many times, talk about the need for you to be able to feel safe and trusted in a particular relationship. And so with this guy, this agent of mine, his idea is to get a committee together to be able to review and look and then hire, because knows he's no good at it. Myself, I'm kind of a hybrid in that I will take the first thing that comes to the door and make the best of it. And I know that in decision making may not be the best business decision, but it does afford me the opportunity to be able to test my own skills with which to work with any type of person and also any type of situation. Now, as a buyer or as a seller, as somebody who needs a loan or somebody who's trying to get a loan for some other project, all of these skills are very important. And that article in National Geographic this month on emotions is really helpful. I suggest you get out there and buy it. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks for listening to the show. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I am Jeff Barton, your voice in the mortgage industry. If you'd like to see this show each and every week, you can do that either by tuning into the radio stations themselves, KCAA, KMET, or going to YouTube. YouTube is a great outlet for us. We shoot this as well as every other show, and it's been on there for the last, 250. How many shows do we have, Daryl, now?
This is 198.
198 on the YouTube channel, Jeff Barton, the Mortgage Voice. And as I said, I really appreciate it. There's some other things on that particular site, as well as my smiling face each and every week. And again, thank you very much for listening. Thank you very much for tuning in. We bring people from all areas of our kingdom. And when I say that, I mean Malibu Funding, who employs me, and also they sponsor this show in 10 different states. And one of the states they're in is Las Vegas. No, that's not a state, but it should be. Nevada. And Las Vegas, Nevada. Phil Pareto, come to our show again. Phil's been on the show before, and he is a financial consultant out there in Las Vegas. We asked him to come and talk to us about what's going on in Vegas, both in an investment standpoint and in the real estate market. Phil, how are you?
Doing well, Jeff.
Excellent. Thank you very much for coming on the show once again.
Well, glad to be here once again.
Okay, excellent. All right, give us an idea of what you're talking to when you're talking to people, because when people come to Vegas, they think in a lot of ways about gambling and all the other nefarious things that the great city of Las Vegas offers. But when you're talking to people who live there and are obviously building a life there, what do you talk to them about when they talk about investments and securing their future in terms of, long-term residual income, things like that?
Well, I mean, I'm pretty biased, and so I have them focus most of their portfolio on securities and stocks, bonds, mutual funds. But then when it comes to real estate, and if they are interested in real estate, especially, a lot of my Asian clients are, I send them towards REITs, actually.
Right.
And it's a way to invest in real estate without all of the headache and all the hassle. They have all kinds of REITs out there. I mean, the really high-performing REITs right now are the ones that have that do the data storage and industrial complexes and warehouses. So that's been doing pretty well for my clients. But obviously, I mean, as an advisor, I would always recommend to have a diverse portfolio and have a little bit of investment in everything. So,
well, let me ask you a question. You talk about REITs. Explain to the listening audience, those people that aren't savvy. We get a lot of people driving around Saturday, picking up stuff at the hardware store or going shopping or listening to the show. And when you say REIT, they're not really quite sure what that is. Explain a little bit about what that is and how one would go about getting involved with that.
REITs are real estate investment trusts. I mean, it's basically a vehicle for people, or a group of people to pull their money together and invest in different properties and real estate. So you have the private REITs where you can actually you're actually working directly and you see what's happening, and there's only a few people. But then they're the ones that are that are public, and you could just invest in a portion of them and see how your investment goes.
Is it like buying a stock? So you go on to, or you call up someone like you and say, hey, listen, I'd like to get into real estate. I'm not quite sure how to do that, and you go from there. So it's like buying a stock, pretty much. Right.
There are REITs out there on the market, and there are financial instruments like anything else. And you talk to your financial advisor, and they'll give you the different companies out there that offer REITs and what they have their investment in, and they can show the performance over a 1, 5, and 10-year period.
Many people who live in Vegas, like everywhere, they have several different things that they do. I know this is your day job, but I wanted to talk some about your fantastic comedy club that you have there in Las Vegas, where it is, when it's open, what kind of talent you have there. It's Tickle Me, right? Isn't that the name of it?
Right, the Tickle Me Comedy Club.
Okay.
And how this pertains to real estate is that the building that the Tickle Me Comedy Club is in the Eclipse Theaters, which was built with private and public money in an empowerment zone in Las Vegas. So it's in the downtown Arts District,
right?
And it's a beautiful, magnificent building, about 3 floors. And our comedy club is actually on the 3rd floor of that building.
Now, what I know personally, but tell the audience why and how you got into being a comedy club owner. I know that you did some comedy work yourself for years, but how did this come about? I mean, on the show we talk a lot about entrepreneurship, about how people open businesses. Tell us your story in that.
Well, it started off as a hobby. Stand-up comedy started off as a hobby, and then it became it became a passion, and I started doing it myself and started producing and marketing shows myself, and eventually I got sick and tired of traveling around the country, traveling around the world, going to 2, 3, 4-star hotels.
Right.
And so I said, you know what? Why don't I just take some of my own club here in Las Vegas, in the city of entertainment, and do all the performing here while at the same time making some money.
I've been to the club, and anybody out there who's listening who's going to Las Vegas, I'll have Phil shout out his phone number or the address of the club in a minute, just to let you know that it's a great entertainment. It's a great spot, by the way. You look out over the city a little bit from the 3rd floor, so it's got a vantage point. And really enjoyed the time when I was there. I think it was really good fun. We went with a couple of people that we both know, and it was enjoyable. I enjoyed the comedy. Do you see it the building of both the audience and the name recognition of what you're doing?
Yeah, it has been already. I mean, we just started in April, and after, I don't know what happened, but right after the new year, we started getting double, triple the size of our audiences. It has really picked up. Audiences and the tourists have really picked it up. I guess our SEO is working, and we're really happy with the turnouts right now.
Now that's interesting. You say SEO. That's what's working for you online. It's not necessarily something through Yelp or some other where do I go for comedy kind of website. It's
well, actually, it's a combination of that. Really, I've done Google ads, and I've also done Yelp ads, and we have 7, 8 blogs out there, and we have writers for all those blogs that help us out. We have a strong website as well.
That's excellent. Okay, so let's go into that. Tell people how they can get in touch with you or the comedy club, or where it is, or anything that would pertain to them having a great time and a few laughs when they come down to the club.
Sure, Jeff. So you could go to ticklemecomedy.com. Just like Tickle Me Elmo, ticklemecomedy.com. It has all the information there. We're at the Eclipse Theaters downtown, 814 3rd Street in Las Vegas, and the number is 702-825-1534, 702-825-1534. And we're on all the social media as well.
Excellent. Thank you very much. That's good. And anybody, as I said, who is listening to the show, when you go to Vegas, go to the club. It's really good. It's different. It's a little bit off strip, but if you've been downtown or you haven't been downtown, it's a whole different scene down there right now. I mean, compared to 10 years ago, with the advent of what they did on Fremont and then all the new hotels, it's pretty amazing. And it's really quite a bit different downtown than it was when I first started going out there in 2004.
Right. It is. It continues to grow every day.
Excellent. Of the 2 jobs, which one do you like best, and which one do you think will be the most successful?
well, let's put it this way. Well, my passion is for the comedy, but what I'm really good at is the financial planning. So,
Okay, excellent.
Both of them will make money.
So if someone needs you for a little financial assistance, how would they get in touch with you? Same way?
Yeah. You could. They could just. They could just look me up on merrilllynch.com. Philip Peredo, Peredo. I have an office in Summerlin in Tivoli Village, and you could find me there.
Phil, thanks very much for coming on the show once again at short notice, but I do appreciate it, and we'll talk later. Thanks a lot.
Okay, thanks a lot, Jeff.
Okay, very good. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I am Jeff Barton, your voice in the mortgage industry, and thanks for listening. Check out our mortgage podcast on Apple Podcasts and Google Music Play, wherever fine podcasts are heard. And it's the Big 8, right, Daryl? Is that what it is? The Big 8?
Big 8.
The Big 8. If you know
Big 8.
anything about podcasts, we're on all of them. So just go there and check it out. Anyway, I am Jeff Barton, and if you want to see me live, this show we can see on the YouTube at The Mortgage Voice. Jeff Barton, The Mortgage Voice. We're on each and every week, and we're also on KCAA, KMET, and K-Tahoe, all three radio stations. We do about 5 or 6 broadcasts per week, and we appreciate you listening. With us once again for an update in her business, as well as what she thinks is the prognosticated view of 2020, is Brenda Scott. Terrific loan. Come on, what do you mean? Why are you laughing? You're the expert. Anyway, Brenda Scott joins us now. Brenda, thanks for coming on the show.
Thanks for having me, Jeff.
Okay, so first things first, how's your business? How's your health? How's your family? Everybody good?
Yeah, everybody's good. Everybody's good. Started off a little slow for the new year, but I'm up and at 'em right now.
Oh, excellent. Okay, so your business is coming from refis or purchases?
Actually, I'm doing a little bit of both.
Okay.
I'm trying to hit this purchase market.
Yep.
Running across some little challenges, but, in a good way, because most of the clients, are able to afford a condo, and the biggest issue I was running with the condos are 99.9 not FHA approved, so
right.
You got to have some alternative financing for those.
Well, FHA has gone to single unit approvals. There's a bit of a process to it, but you don't need the complex anymore approved. And that happened just late last year. I don't know if anybody was aware of it, but that's what FHA is doing for non-approved kind of complexes. They're approving the unit itself.
I'm doing some deals. Well, I have a few deals pending under the Home Ready or the Home Possible program.
Yeah.
That is a very good program, and the rates are extremely good.
Tell people what that is, because I think it is a good program, and one is a Fannie Mae product and one is a Freddie Mac product.
Exactly, and it's an alternative to, condos or homes that are just not qualifying for the normal FHA.
Yep.
And your down payment is less because the down payment is 3% versus 3.5%.
Right.
And the MI is very, very competitive to what MI would be on an FHA process.
Right. No, I like the product. I like the fact that, they've jumped in, and this 3% down is really good. I think even the mortgage insurance is a little less than FHA, isn't it?
It's a little less than FHA,
right.
Absolutely, which is making my buyers a little bit more marketable when they're going out there looking at these condos and these townhouses, because, it's in their price range. And I'm talking price range from, $350 up until $525. And the association is a killer.
Yeah, that's the other thing. When you go in these associations, they have the association dues. How is that affecting your debt-to-income levels? Is it adversely affecting all of them, or how are you calculating that?
Well, with the Home Ready program, it's putting me in a little better position to get them qualified. Even if the association is a little high, their debt ratio can go just a little higher,
Okay.
which makes the client a little bit easier to qualify for.
Now, what's going to happen next year when they do away with this patch that we've been working under with Fannie and Freddie, i.e., expand?
Oh my God, I have no idea. I was
Right.
going to look to you to really.
Well,
I have no idea. I really don't, and it's really sad because I'm really upset about it. And
right.
I got to read about it, and I think I'm very disheartened on that.
Well-
On that transaction. I don't know who voted for that. I didn't.
Well, what's going to happen is that currently we have about 30% of the market non-QM, and non-QM, everybody knows, are product that is sold to the private sector, not to Fannie Mae, Freddie Mac, Ginnie Mae. So that number is going to go up, right? It's going to be closer to 50, maybe
absolutely.
60%,
Absolutely.
which is
And their pricing is pretty good.
it's not bad.
It's really
No,
good pricing.
I agree, and I think if we were to hold interest rates where they are, that would mean that you were probably looking at a non-QM product at maybe 3/4 to a point and a quarter higher, which means it's still very affordable, under 5%.
Still affordable. And the
Yeah.
guidelines are not as high either.
Right.
I mean, the guidelines are real straight to the point.
Yeah, I think that's what's going to happen, and I think what a company like Malibu Funding is going to do is to increase its warehouse lines and begin to try to channel people through that particular method by which they're funding the non-QM loans, not just Fannie and Freddie loans, which allows a lot of flexibility in both, pricing as well as credits. And I think in that way, you'll be able to make up the business as long as the rates don't, go over 5%. We should be okay.
I think that's awesome. That is really awesome.
Okay, tell us.
The
Go on.
ahead.
No, I was going to bark in there another answer, but you had something to say. Sorry.
No, well, I was even saying credit. Even the FICO scores and the guidelines, they're changing quite a bit. I mean,
Yep.
people need to be aware of if they have any credit item that's in a disputed issues, they have to remove those out of a dispute status because it adversely does affect your FICO score. While it's in dispute, it doesn't affect your FICO score. But once you take it out of a dispute status, it's affecting your FICO score.
Brenda, how does a lender look at that in underwriting? If they see a credit score or a credit dispute on the credit score or on the credit report, how do they view that? Do they view that as a negative? Obviously they do, but I mean...
They do, but the lenders that I've been working with, they will go ahead and give me an approval. In one case, the lender gave me an approval, but the approval was subject to the item being taken out of dispute. Now, even if that item is taken out of dispute, you still got to fall within those FICO score, those lenders' guidelines for FICO score.
Of course.
In this case, when we took her credit out of dispute, it did not change her FICO score whatsoever.
Oh, you're
so
lucky.
That was a blessing for
Yeah,
her.
you're lucky. Because I know that adversely, you could find yourself out of a loan and not be able to get your client a loan just because in the dispute, and how do you even know what it's going to be when it comes out of the dispute? You don't know, right? And that's the problem.
You don't know.
Right.
And the credit companies charge a fortune. You can get it out of dispute pretty quickly, but it is a fortune to have the credit company actually do it versus the client getting on the phone, calling the creditor saying, hey, I need to take this item out of a dispute. I didn't put it in dispute, or I resolved the issue and it's still showing in dispute. They can do it quicker and a lot less cost if they do it. But if we do it, it's going to cost them.
Well, I know. I mean, it could cost, a couple $100 anyway. I mean...
Easy, per bureau. And so if
okay.
you got 5 or 6 items in dispute, then that's going to cost you per
there's 5 or 6 times 200 each. That's $1,000.
Exactly.
Right.
Exactly. But it can be done. It can be done. I got one approved, and thank God her student loans were in a dispute, and the lender gave me an approval, and they didn't even ask me anything about the disputed items.
Well, that's good. Did you fund the loan, or are you still waiting for the funding?
No, it's a purchase.
Oh.
We're due to close any minute now.
Okay, then let's close that loan. All right, so how do people get in touch with you? Terrific loan officer, real estate agent?
Yeah. If you have any questions regarding any type of loans, I'm working. I've worked a few loans on the reverse mortgage. Please call me 562-500-2400. There's no cost to just ask questions and get a professional answer on your questions.
That's what I've been telling people. Before you do anything, interview, ask questions, because you know what? If it's not a fit, you better find out up front. But Brenda,
Absolutely.
you're a fit for anybody. Thanks for coming on the show.
Thank you, Jeff.
Okay.
God bless you and have a great day.
Great, and you as well. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks for listening. Check out the Mortgage Voice podcast on Apple Podcasts and Google Music Play, wherever fine podcasts are heard. We're on the Big 8, everybody, so if you're a podcaster, you know exactly what I'm talking about. And if you want to see us or get to a different venue and hear the show, go to YouTube, The Mortgage Voice, Jeff Barton, The Mortgage Voice, and you will see this and many other shows pop up. You can watch us, see us. We're also on KMET, KCAA, and K-Tahoe, 3 great radio stations that we've been with for, years. We're on 6 times a week live, and we appreciate you listening. We love your feedback, and if you get to any of those venues and write us a little note, I'd love to hear from you, because what you say is what we try to bring to the show and on air. In regards to that, real estate is really booming because of low interest rates. I talked to one of our residential experts, Jim Aldridge, who's been on the show many times, but I haven't heard from him in probably 6 or 7 months, and he joins us now. Jim, how are you?
Hey, Jeff, how are you?
You know what? I'm okay. You know what? It's with AB5 kicking my butt right now because, as you know, that was a big issue for 1099 employers.
Yes,
and then, not quite sure what's happening politically, and luckily, the trade deal's done, so it looks like the economy is going to be booming again. So tell me what is happening in your life, in your world, in the real estate aspect, commercially or residentially, so we can inform the listeners of what's happening.
Well, you hit on the big issue in your intro, is just that the interest rates are still at historic lows.
Yep.
They started climbing up a little over a year ago, and 10-year Treasury popped on the high side of around 3.25 and slowed everything down, but now they're back to the sun is shining and everybody's making hay because it's
right.
Cheap money. So in your world, kind of on the commercial side as well for us, we're having a difficult time finding transactions. In fact, I heard you mention you're somewhere up in Tahoe. The majority, if not all of our equity deals, meaning deals we purchase, are in the Reno market.
Okay.
I haven't done a deal in California in 3 years, 3+. But we've got about 4 transactions, multifamily or small industrial for, build to sell up in Reno. And then in LA, we're still doing the hard money loans, but fewer because there's just so much money chasing deals. It's tough to find a good one even in that market.
Yeah, that's interesting. And when it gets like this, a person like yourself who takes money and invests it and then either turns it to somebody else or is looking for, I guess, money to invest, it's easier in Reno, Nevada, obviously. And is there the same level of product there? What are the prices in that market?
It's not that that there's not product even here. It's just a function of what are the expected yields you're going to get.
I see.
Going forward, and there's a couple things going. The benefits of being in Nevada, whether it's Reno, I guess, or Texas for that matter, this state tax is a
right.
big deal. The less regulation on small businesses. So what's happening for Reno, Vegas, Texas, Idaho is that small businesses up to significantly sized businesses are moving into these markets quality of life for their employees and quality of life for themselves, so that they can increase the profit margins. For there's no tax and just the less regulation. So there's a growth opportunity, kind of like a macro growth opportunity for those markets, because there's so many businesses and people moving for quality of life and to avoid the new taxes. It's a big deal.
Well,
you can't write off your mortgage, you can't write off your taxes.
Right.
So
right.
You've lost you've had a huge, even though it's supposed to be a tax decrease for California, New York, Jersey, and these high state taxes, you've taken a big hit.
Yeah, it's taken a big hit, and I think a lot of people, about 1 million people, left the state of California last year, and I think it's because, although you may have a tax break in one small area, the state has really picked up the ball and decided that they'd like to raise your taxes, either by getting rid of the Prop 13 Howard Jarvis property tax by ballot initiative, or by the fees that they charge you on a local level, whether you want to get an extension on your house or put solar on your roof. There's a lot of things about California that aren't attractive, and as a business owner, it's difficult to justify, if you want to build a business here with employees, people to live here, when you just said the quality of life here is harder and harder because of that fact.
Yeah, and the places like these kind of borderline states, Nevada, Arizona, Idaho, and then Texas.
Right.
There's so many opportunities, because the businesses are moving there. There's a shortage of housing. There's a shortage of just viable employees, and so it's just a great place to be. And so we, about 4 years ago, picked up our first property up in Reno.
Right.
And we've over the years, again, it's like anything else. You have to be selective, and it's not like this deal's falling out of the sky, because
sure,
people do kind of feel as though they're betting on the come line that the market's going to continue to grow, and
of course,
and values are going to go up. So there's not every deal you look at is great, but there's enough of them out there, and then there's the macro play of, hey, this is a market that feels like Vegas did back in like 92 and 3.
That's right, 25, 30 years ago. Right, I agree with that. Right.
There's very much that feel like there's a momentum that I've been going up to Reno to visit my father for 13 years.
Right.
And about 4 or 5 years ago, you could just feel like, wow, something's different. And then this new tax law and the regulations that are on these small businesses just increase the flow of people to that region.
Well, if you're up there and you live up there, and as I said, the radio show is played up on K Tahoe, and I've had a number of times that I've been up there myself. It's a very close drive. I mean, if you're driving even to Sacramento, or San Francisco, it's really, you're close enough to be able to get around in California. But Reno's nice, man. I mean, it's a beautiful area.
It's a changing market.
It's
a changing market. It's becoming more eclectic, and there's more dynamic businesses. It was what was called kind of a community, let's say 10, 15 years previous.
Right.
It was very kind of lower end businesses and jobs that were created in kind of the casino business or
right.
Restaurants. And now it's real deal businesses. I mean, there's a number of companies with 15 to 30, 300 employees.
Right.
That they move up there, they're getting paid the same amount, and they're living a quality of life that's 3-4 times more
what they were down here. No, I understand.
They were down here, so that's kind of why we focused up there. We like it up there, and as long as we can kind of pick and choose and pick off the ones we think are good with some long-term growth is what we're looking for.
Do you still entertain people who want to invest as like they would in a REIT or something like that, in terms of what you used to be doing with a company called Prop Funds? Are you still doing that?
Yeah, we still have prop funds, but the majority of, in fact, all of the investors are people that have been investing with me for years.
I see.
There's always referrals. People have been referring somebody saying, hey, these are pretty good opportunities, so why don't you jump in? But we haven't really actively done the crowdfunding for probably 5 years.
I see.
It was a business model that seemed interesting, and there were a couple of companies that got some traction, but it was very few.
Yeah, and that's interesting you say that. And because you're an entrepreneur and somebody who's out there in the marketplace, how do you suggest people either contact you or get involved with someone like you who's looking at projects like this, who you say you have a kind of a closed group right now, but always are entertaining other avenues by which to obviously both help yourself and help people invest?
Well, we're always raising capital, and we're always looking for good deals. So if they want to reach me, they can get me at jim@propfunds.com. And if they have a deal they think is a good one, or they have, they're earning 2% in their CD, and we're certainly generating returns higher than that, they can reach out to me, and we can go from there.
Excellent, Jim. Thanks very much for coming on once again. I appreciate it. You're always somebody who has their ear and their pulse, your finger on the pulse of what's going on in Southern California, certainly in the commercial market, and I appreciate you once again coming on.
It's great talking to you, Jeff. Glad you're doing well.
Thanks, man. Thanks very much. I'm Jeff Barton, your voice in the mortgage industry. Thanks for listening, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome, everybody. I am Jeff Barton, your host in The Mortgage Voice. Thanks for listening. Check out the Mortgage Voice podcast on Apple Podcasts, Google Play Music. Google Music Play. Is that what it is? Google Music Play. And whenever fine podcasts are heard, subscribe for free. Never miss an episode. Also, if you get to there, leave us a review. I don't know what we're doing wrong or right unless you tell us, and I really appreciate it if you do. We love the exchange back and forth, and we always integrate those kind of things on the show, so leave us a review. It's really good. We're also on YouTube, Jeff Barton at The Mortgage Voice. If you go to YouTube and see us, we have this as well as many, many episodes on the show on YouTube. So we appreciate you listening each and every week, and thanks very much. So let's talk a little bit. Well, first off, I was talking to my buddy, and earlier in the show I was talking about it, and he called me, and it's nice to catch up with old friends. But, Daryl, let me tell you about old friends. They're old.
They're old.
And they're old. What
Yeah.
happened?
And sometimes they tell the same stories over and over.
Oh, man. You want to get bored? Let me tell you something. Talk to an older man, that's my age, your age and above, about his particular dating habits. Oh, boy. You want to go back to high school? That's what it's like. And I didn't like it then. It was just, poor Steve. And I know he's listening, too, because I told him to go. So, anyway, let's talk a little about rates and what the rates are. Interesting week with what's happening both dramatically with what's happening nationally in the political scene. What's also happened with two different trade deals that came down, the stock market itself. All these are indicators of what we're likely to see this year from the economy. And then on the downside, there's some purchasing reports that didn't come out quite as big as they thought. And there's also some inflationary numbers that they're trying to adjust to make I guess they're trying to adjust the inflation number, as we talk about on the show. The Fed likes to see an inflation number of about 2% per year, and we're well below that. And they're trying to adjust that number in order to rate and set monetary policy. The Fed controls the monetary policy, how much money they print. The Treasury prints is really done by the Fed. I'd like to start to, in segments of the show, talk about the Fed board members. There's 9 of them. Or 11, I forget which. But each one of them has their own particular bias, what they look for. The Fed chairman, which is Jerome Powell, who is always being derided by the president. I guess that's a redundancy, right? I guess our president is sort of all over everybody all the time.
Yeah, they're coming out with the new $1,000 bill, and he wants his picture on it.
I'm sure. Are they really?
No, I made that up.
Oh, that's excellent. Oh, that's perfect. No, look. The economy is doing pretty well right now. We're just looking for any reason why we can look down the road and say, you know what, we're in trouble. But currently, we're doing a pretty good job. Anyway, the 30-year fixed rate mortgage, as it stands today, as a sort of average across the country, is about 3.625% to 3.75%. And it says that these are about 2016 rates that we're looking at today, which are really good. Rates went up, as everybody knows, and then last year, midway through, they started to descend and have been there really ever since. The Fed cut rates 3 times last year, which also helped short-term interest rate loans, either to, your car loan or your credit card debt. These things all were affected to the positive. Let's see, the FHA VA loan, 3.375 smoking rate, really. The only thing you have to consider when you go FHA VA, the reason people go FHA, bad credit score, not enough down payment. If you have a 700 FICO score and you can come up with 10% down, don't do FHA. Because why? Because you can get a better deal. Because within FHA, even though that rate sounds 3.375 smoking, you still got to add in the mortgage insurance premium, which adds probably 1.25% to that, and that's divided up monthly, and that's your mortgage insurance premium. But other than that, let's say you have a 600 FICO score and you only have like 3.5% down, yes, this FHA program is great for you. The 15-year fixed rate loans now are 3.25% up to 3.375%. That 15-year, I'm telling you, I'm a big believer in it. If you can afford the extra money you're going to be paying because it's a shorter term loan, the rate's terrific and your house is paid off, and you just bring yourself that much closer to economic independence, which really is what a lot of this is about. I mean, we talk about all indices, whether it's the stock market or whether it's treasuries or whether it's the bond market or any other things that we talk about, all has to do with money, really your money, about becoming independently, financially successful so that you can retire without worry, without debt. A friend of mine was talking to me today, said, look, and he was over 65, 66 years old, I think. He said, if I had $1 million in the bank, I'd be set for the rest of my life. And I'm thinking, well, maybe not. But anybody in Southern California who owns a house, by the time they retire, let's say you're 40, 45 right now, you own a house, it's worth $500,000, you got, another 15 years to pay the thing off, you're going to be worth well over $1 million. I mean, you think about that house, all the retirement that you may or may not have. A scary figure. Have you thought about retirement yourself? I mean, we're still working, but...
Well, I mean, the thing that I would like to see is to compile enough money to put in the bank and have a high enough interest rate
right.
that you could sort of live off the interest and keep the principal, right? To me, that would be the ultimate way to go.
Well, this is like the... if you buy like a corporate bond that pays dividends, it's that kind of thing, right?
Yeah, but home ownership is the number one way to get there.
Always the number one way. The problem is at the end of your life or at the end of your working life, you end up with a house that's paid off and, you can't tap into it. And then they have products. You can take out a loan or you can do a reverse or several other things to get you into that equity. I told you last week about my father-in-law, what he did, and also my brother-in-law.
Right.
They took out life insurance policies, right? And then they sold the life insurance policy to somebody. Let's say you take $1 million life insurance policy out, and then you get $750,000 cash up front if you sell the policy, or you basically give your beneficiary away to somebody who's buying the policy. The only trouble is they call you every other week, say, "Hey, how you doing?"
I heard that little cough in the background.
Yeah, you're not feeling too good, huh?
Yeah.
That's pretty
Too
good.
much time in the coal mine.
That's so. If you're out there right now, the rates are smoking. The 5-year fixed rate arms, that's an oxymoron. The 5-year ARM product is 3.25% to 3.75%, and we always say if you're moving, if you plan to, not occupy the property more than 3 to 5 years, that's a great product because you can get in there. Let's say you want to buy this house and you want to live in it for a couple of years, but you want to fix it up as you go along. That's a terrific way to do that because you keep your upfront expense down, you keep your monthly down while you still live in the property, and you're fixing it up so that in 2 or 3 years you can sell that property and make some money as well as pay as little as possible on the interest rate. So all that's pretty good. Okay, Gen X, Gen Z, millennials finally are coming to the table to buy homes in droves. This is the new report that I just got from Jan Swanson on the Mortgage News Daily website. She talks about how these particular groups are now the largest groups in the home buying market and are increasing. It says, the share of adults who told National Association of Home Builders they were considering a home purchase in the next year now has risen 2%, and it is, let's get the actual number. I'm looking at here. in the percentage-wise, 88% of these Gen Zers, 78% of the millennials, the Gen Xers are still low at 57%. But that means that of all the people in that pool, that percentage of people now want to buy a house. That's a big number, 88% for Gen Zers. And they're pretty young still. I mean, they're not, they're younger than the millennials.
Yeah, they probably haven't hooked into the career that they're going to work in the same place for a long time at this point.
Maybe.
And they're sort of moving around a little bit. When you're moving around a little bit, it's a little dangerous to buy a house if you don't know where your next job is coming from.
Well, that's true, but I think this group finally is getting a little bit.
Oh, yeah, they're getting into a comfort level.
I think that's what it is. And whether it's, as I said earlier in the show, about emotions and how emotions play on you, maybe they think they're going to miss out if they don't get in now with the low interest rates. And that's the key to a lot of this home purchasing, are the interest rates. They're smokingly low.
It's true. I mean, that's the most truest thing I've heard in a while.
Anyway, thanks very much. Thanks, Daryl. Thanks for jumping in and helping out. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening. KMET, KCAA, and K-Tahoe, our great radio stations and affiliates. Listen to them. We're on 5-6 times a week. I'm Jeff Barton, your mortgage voice, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.